Wow. So 2026 started with a serious bang for the Indian stock market, and it's pretty much all thanks to one name, Bharat Coking Coal Limited. You probably saw the headlines. Their IPO wasn't just the first big one of the year. Oh no, it set off an absolute frenzy. Today, we're going to dig in and figure out what all that hype was about. And just to give you an idea of the sheer scale we're dealing with, just look at this number, 143.85 times. That's how much the IPO is oversubscribed. So what does that even mean? It means for every single share they put up for sale, nearly 144 people were in line trying to buy it. That's not just high demand, that's just staggering.
Which, of course, brings us to the big question, right? How on earth did this happen? What is it about this one company, Bharat Coking Coal, that got the market so incredibly hyped up? Well, that's exactly what we're here to figure out. And to do that, we have to start with the company itself. All right, so first things first. To really get why the IPO is such a big deal, you gotta understand the company at the center of it all. Bharat Coking Coal Limited, or BCCL for short. Okay, so BCCL isn't just some random company. Think of it as a vital gear in India's massive industrial engine. It's owned by Coal India, which is a government entity, and it's the absolute top dog when it comes to producing something called prime coking coal. Now you might be thinking, coking what? Well, it matters a lot, because simply put, without coking coal, you can't make steel. It's that critical.
And we're not talking small quantities here. The scale is just immense. We're looking at estimated reserves of nearly 8 billion tons of coking coal. Just let that number sink in for a second. That massive asset base, that's a huge part of why investors were practically tripping over themselves to get a piece of this company. And this chart, it shows you just how dominant they are. In the last fiscal year, BCCL was responsible for almost 60% of all the coking coal produced inside India. When you control more than half the market for something this essential, well, that puts you in a seriously powerful spot.
So what's a day in the life of BCCL look like? Well, they're running 32 different mines. We're talking open cast, underground, the whole shebang, plus 5 coal washeries to get the stuff ready. They're basically the lifeline for the steel and power sectors. And on a bigger scale, they're a key player in the Atmanirbhar Bharat mission, helping India rely less on expensive imports and more on its own resources.
Okay, so now we've got a good picture of who BCCL is. Let's switch gears and dive into the nitty-gritty of the IPO itself, the numbers. Now, this is a super important detail you need to know. This IPO was what's called an offer for sale, or an OFS. That means BCCL itself wasn't actually raising money for its own growth. Instead, its parent company, Coal India, was selling off a chunk of its own shares to the public. So all that cash, it went straight to Coal India, not BCCL. It's basically part of the government's bigger strategy to divest from some of its companies. And man, this all happened fast. The whole thing was a whirlwind. The offer opened up on January 9th, and just a few days later, on the 13th, it was closed. By January 19th, boom, the shares were live and trading on the stock market. Super quick. So let's look at the key financials here. The goal for Coal India was to raise a little over 1,000 crore rupees. They set the price between 21 and 23 rupees a share. Now, for a regular retail investor, you couldn't just buy one share. You had to buy a lot of 600 shares, which would have set you back about 13,800 rupees. All right, so those are the official specs of the deal. But now we get to the really juicy part, how the market went absolutely wild for this thing. This is what everyone was talking about. So to really wrap our heads around the hype, we need to talk about something called the gray market premium, or GMP. Think of it like this. It's an unofficial, behind-the-scenes market where people trade IPO shares before they're even listed. A high GMP is basically the market whispering, hey, this thing is going to be big. And would you look at this trend? Even before the IPO officially opened, the gray market was buzzing, predicting a listing premium of over 70%. Can you believe that? It cooled off a little, sure, but it stayed incredibly strong at a 50% premium the whole time. That was a massive signal to everyone that they could expect some serious gains on listing day. And you bet that excitement translated into mind-boggling subscription numbers. I mean, retail investors were super keen, subscribing almost 50 times over. But the big dogs, the institutional investors, they were on another planet. They bid for over 310 times the shares that were set aside for them. It was just an insane, unprecedented rush.
But hold on. A frenzy is one thing. But with any investment, it's never the whole story. So it's really important to take a step back and look at this from all angles.
the good and the not so good.
So let's get a balanced view here. On the one hand, the strengths are pretty obvious, right? They're the market leader, they're sitting on huge reserves, and they have the solid backing of the government. But there are challenges too. Remember that OFS structure? That means none of this IPO money is actually going to BCCL to fuel its growth. And then there's the elephant in the room. The entire coal sector is facing some major headwinds with the global push towards renewables.
Okay, let's zoom out for a second. Forget just BCCL for a moment. What does the crazy success of this IPO tell us about the bigger picture? What's the vibe in the market right now?
Well, it sent a few really clear signals. First, it proved there's a massive appetite out there for these government-owned companies, these PSUs. Second, for Coal India, this was a huge win, a super successful divestment. You can bet this success is going to make them think about listing other companies under their umbrella. And finally, and maybe most importantly, it was like a huge shot of adrenaline for the entire IPO market right at the start of the year.
And this quote from ClearTax really just sums it all up perfectly. Even with those risks we talked about, the experts saw this as a rare chance to get in on a company that's just fundamental to India's economy. Yeah, it was a play for long-term investors. At the end of the day, this whole story was about a company of huge strategic importance crashing head-on with incredible market demand.
Hey, if you got something out of this breakdown, do us a huge favor and hit that like button, share it with a friend, and definitely subscribe so you don't miss our next deep dive.
And last but not least, we really want to hear from you. What should we tackle next? Is there a company, a new piece of tech, or a market trend you're curious about? Drop your ideas in the comments below. We read all of them. Thanks for watching, and we'll catch you on the next one.